Good afternoon, and welcome back to yet another episode of the Winnipeg Market Watch podcast. Ladies and gentlemen, I did make a mistake in our last episode where I referred to it as episode 6. That was actually episode 7. Today, we are recording episode 8. Just a friendly reminder, my name is Keenan Brown, and I am a real estate agent with the Judy Lindsay Team Realty, and I'm very pleased to be joined today, as usual, by my regular co-host, Denzel Sullivan, but also a very special guest, Patrick Hilario. Patrick, thank you so much for having this opportunity for us to all come together and to talk with you on the show.
Oh, I'm excited, especially I get to hear the live market update.
Awesome. Well, we're looking forward to breaking down the data here. Without further ado, I will jump right in. So, July was a very interesting month for a lot of reasons. Now, for those of you who have been listening for a long time here, you might be aware that we've now in Canada had two consecutive rate cuts, bringing the Bank of Canada benchmark interest rate down to 4.5%. And in June, it seemed like that might have given the market a little bit of a steroid because we saw an almost 1.5% climb in pricing. In July, despite generally strong supply numbers, the benchmark price actually fell down to 419,100 from 421,600 the month prior. Now, we are still 10 and a half roughly percent from from December of 2023. But a lot of people were a little bit panicked when I published that the benchmark price actually fell month over month. Um, Denzel and or Patrick, you guys have been around long enough to know that July and August are typically the months where prices start to fall from the seasonality in real estate. How did you guys feel about this month's data set and the price action in particular?
I'll go first here. You know, I'm not super surprised to see that July was a little less active per se. It's been my third year selling properties in this time of year, and I'm just not very surprised that the prices came down just a little bit. I think that most people who are flipping homes, like myself, need to be aware that it is a possibility. But looking a little closer at some of the data, it appears that, you know, 0.47% isn't a whole lot, if we're thinking about the market in a just from a macro perspective. What is that, Keenan? Like what,
It's nothing.
$3,000 or something like that? It's nothing really. So, you think about it, and people are away during the summer holidays. Parents have their kids all day, and just there's not a lot of people thinking about buying homes. I know that you're going to dig deeper into some of the supply picture and as well as the absorption data. So I won't spoil it for everyone else, but yeah, it didn't really come as a big surprise to me. And I'm actually thinking that with the lack of activity in certain areas, I think that and not to mention the news with interest rate cuts and things like that, I think the fall market actually is going to be great. And further to that, the spring even better of next year.
It's a good perspective. Patrick, anything to add?
Yeah, I kind of share something similar just because I tend to look at data a little bit less. I look at like your guys' market update and then watch a little bit of go here. But a lot of the data that I get is through like conversations with other investors or people trying to get into real estate. And yeah, kind of share similar sentiment with Denzel, how yeah, July, June, there's a lot more people that they're on vacation, they're taking care of their kids, their thoughts around real estate is almost like an afterthought. And then they're almost waiting for fall. So then when I saw the dip, I was like, okay, well, it's not that crazy. But it kind of matches the sentiment that I've been having with conversations with people where, yeah, they're not really looking at real estate in the summer. I find it's more renters looking for places before fall than it is like buyers really trying to like push and close something. Very different from the conversations I was hearing in like springtime where people were excited to like deal hunt. Now it's like they're more excited to go cabin, go on trips, go to like festivals, yeah, things like that. So yeah, it's very similar to I guess the data kind of reflects that too.
That's actually a really good point that you brought up there. And I'd like to add from the agent side, that is absolute factor on the buy side clients that I'm working with currently, and actually to some extent, as well as the listing clients that I'm working with right now, where life is getting in the way of real estate. And this is something that in my 6, almost 7 years of being in the market, I have seen every single year, pandemic or not. So, um, all very good points from both Denzel and Patrick. I would like to add that that is completely normal for Winnipeg at this time of year. Now, what I loved to see in this month of data was the fact that the supply situation remained so strong in July when compared to June. And when you compare the July 2024 data to the July 2023 data, it looks like everything is just better. There's fewer active listings on the market this year than last year. There's more transaction volume and actually by number of sales and dollar volume going on right now. Our average price is a lot higher, and the percent of sales to current listings is still far and above better than where we were at last year. So you guys might know this, but one of the metrics that I watch very carefully is I like to see if the average sale price in the city of Winnipeg for detached homes is above the current benchmark price. And if you guys have been looking closely, you might have noticed that this year that's been the case actually every single month year to date. And it remains the case in July, where our average sale is $433,257. The benchmark price is just at about 419 and change. I've been saying that this is an indicator that higher prices are in the future, but given the seasonality, that's just probably not likely to happen. Um, any comments on the supply data and that gap between the average price and the benchmark price? I'll start with you, Denzel.
Yeah, I was looking at the report that you put together just to see, because we had a couple houses for sale last July, and I remember it was a tough time trying to sell those houses. And although, we have a couple houses still available for sale right now, or sorry, one, I definitely see there's a massive difference just in the amount of sales year over year from last July. I would even argue that, and I'm not too sure about you, Keenan, like I'm probably more busy this year in July than I was last year. So not only is it noticeable just through the hard data, like I just feel busier as well. I have nine projects open at the moment, and it almost looks like every time I check MLS or the searches that you have me set up on, there's actually quite impressive sales happening across the city. Things that are going well over asking price. And I think that the market is in a lot better shape than it was in from last July. Especially because last July, with rates not knowing where that was going to go, and now with the rates coming down, I just think it's I don't know. I will see how crazy things get in a few months, but it's all good signs of a healthy market here in Winnipeg.
I couldn't agree more. I'm on exactly the
Yeah,
same page, and I am also far busier this year than last. Patrick,
yeah,
I'd love to hear your take on the matter.
Yeah, what's again interesting that I because I have more of the conversations with like people, and then again I look less at the numbers other than when I'm looking at direct deals. But something I have noticed is there's a lot more deals going like over ask, and then I was talking with a few of my clients, and they're trying to sell this house. They thought they would only get like 218 and they end up getting like 256. And I was like,
Oof.
oh, what the heck's going on there? Like it's not like an amazing house. Like, it's on the not the best side of the West End. Like we're talking 5A. And after they had given me some notes that the buyers had given, and the buyers had just mentioned that they were just tired of like not closing on the deals that they liked, and they just wanted to close a house and just get into a property. And then I tried to talk to other buyers that had bought recently that I knew they came to me like, oh, we think we paid a little bit too much, but it's our house. It's not really an investment. And it's kind of a similar theme where I've been finding these buyers are just wanting to own a property, call it a day, and they understand that it might not be their forever home. Versus last year and even the year before, I was noticing a lot of these, again, like first time home buyers, they just wanted their forever home like off rip. That might have something to do with it. I know it's different for us investors because we'll run the numbers, really make sure, okay, this has to work. But I know that the sentiment is different with these first time home buyers that now have been noticing a lot more, especially the younger people, like in their early 20s, early 30s, where they seem to be more okay with getting their first deal, paying a little bit more just to get into real estate, and then knowing that, hey, that might not be their forever home, that could become a rental later on.
And I think that strategy for the vast majority of people of not necessarily rushing to the forever home is probably the more responsible way to go about it. Because very often, if you try to buy your forever home straight from renting or straight from mom and dad's, you are going to be very highly leveraged in order to make that possible. Unless you're making a ton of money, then I mean, at that point, congratulations. Like, you probably don't really need to be talking about an investing podcast and listening to this, but it's one of those situations where if you are trying to reach like that, you might end up putting yourself in a worse position overall, trying hard to make those payments to pull that off. But very interesting that you noticed that. I think that's definitely a symptom of supply being consistently lower year over year every single month of this year. And when selection is low, it tends to make it harder to get into the good stuff. Which actually, that's a nice transition to the next point. Um, we talked a little bit about absorption in some areas that might not have traditionally been super hot, being a little bit better than they have been in the past. And what I found in the data, especially May, June, and July, most MLS areas are very, very hot, but there are pockets where they are far hotter than others. And in July, 32 out of 61 active MLS areas with residential housing in them had 80+% absorption. Some of these areas have almost perfect absorption on a year to date basis, including Westwood at 96%. That is 5G for those of you that prefer the area codes, and Area 3C, which includes Glen Elm and Fraser's Grove at 94%. Denzel and Patrick, as investors, when you guys see that the city is somewhat segregated in areas with 80+% and then areas generally at 60 or lower, does this feed into your eagerness to do deals in certain neighborhoods versus others? Either of you can go.
Yeah, no, absolutely. I think, when I was early on, when I was starting to learn the ropes, and I still am learning the ropes with regards to like flipping houses, a guy said to me that if you're in an area that's easy to buy, it's going to be hard to sell. So when I say easy to buy, I'm talking about an area like, call it Sinclair Park, St. John's, 4C would be that MLS code, where there's tons of inventory. There's a lot of people that would like to sell. Um, and so it's easy to buy homes in the area, but could be a little bit more challenging to sell in. Now, when we think about where it's hard to buy but easy to sell, an area such as Westwood with a 96% absorption rate, I certainly would want to target my marketing and or lead flow to come from areas with an absorption rate that high. Because the last thing that we would want is having to sit on something for a long period of time, especially when we're, taking out high interest loans to get some of these deals done. So yeah, I think from a strategy standpoint, for anyone who's like trying to think of where they should start or if an area is a good place to, I guess, farm for leads, take a close look at where the absorption rates are above 85%. And if it's higher than 85%, it's probably a good place to start. Now, it might not be easy to find a deal. It could take up to 30 to 40 days to make the numbers work. But you can guarantee that when you're done that place, you shouldn't have a problem selling. Yeah, so that's my take on it. I think that it that metric, and we talked about it a lot, Keenan, has a ton of influence on what we do in the business.
Absolutely. And
Yeah.
I would say that that chart of the year to date absorption is probably the single piece of data that I would look at the most when evaluating property for ARVs for investors.
Yeah.
I get to know it pretty carefully by the end of the month because I look at it so often, but
Yeah.
especially in the first week, I'll reference it a fair bit and just to get a sense of what exactly is going on. But Patrick, you talked a little bit about Area 5A earlier and a deal that you had in there. Um, I know that your business can easily be citywide, but I'd love to hear your take on the absorption situation and what it's like, especially trading in an area like 5A, which featured a 52% absorption rate year to date so far.
Yeah. So with 5A, I've been noticing we've been getting a lot of private deals around there and with very little marketing, right? And it kind of reflects that lower absorption rate where it's like there's a lot of deals out there. Maybe they've already tried to put on MLS, hasn't sold. Now, it does take a little bit of time to still get these sellers to a point where it's like, hey, these numbers work for you and they work for us. Then we can kind of move forward. And I kind of shared it's a similar, I guess, thoughts as Denzel. Now, I don't flip as much as Denzel for sure, but if you're new, like taking a look at the absorption rate and understanding what that means is probably the next step after you've already learned how to analyze deals, whether that's analyzing a flip or analyzing your like cash flow for a rental. And it just shows you like how easy or how difficult it is to move that property, right? And for sellers or the wholesaler, well, for the wholesalers and the flippers, I should say, understanding that, hey, if you get into something that has that lower absorption rate, sure, you might be able to negotiate a little bit better, but then it's going to be harder to move, which is fine if you're doing like buy and hold in burrs. If you're flipping, it might be difficult. And that's where I'll even coach my students, hey, if you're looking at these areas with lower absorption rates, it's like market for buyers before you lock in those deals. Because in that way, you know, hey, this person is okay with buying a house in 5A. It's not everyone is, right? Like
Mhm.
I'd say maybe 10% of my buyers are okay with 5A. It's higher than, 4A, which is like core North End type stuff. But on the other side too, something I noticed is if you own property now, maybe you're not necessarily looking to buy or to flip, but if you own property and rentals in these areas with higher absorption rates, I saw it as like an indicator that, hey, you can increase rents because you could either sell and cash out, cool. But if you can sell that easier and with more speed, then why not increase rents? And something I've noticed is with those areas where, like you mentioned, Glen Elm, I've been able to increase my rents across the board by like an extra $300, which completely changed my cash flow.
That is an interesting observation to use the absorption data to influence rental possibilities, and that's something that I've never actually thought of, but it does make sense. And I like the creative thought there to see that as a way that the rental market and obviously the sale market are pretty closely linked. And if everything is selling in a certain area and no one can move in, there's probably some rental pressure as well. So great observation there. Um, I've got a special question for both of you, and this has been something that's been rattling around in my head with this data set for quite a while, actually. But I've made this 85% plus absorption list every single month for the year. And what I've consistently noticed is the MLS areas starting with specifically 3, 5, and actually most of the areas that start with a 2, they've been in there, but they had a lot of 84% this past month. But section 2, 3, and 5 have been ultra hot, whereas we've never had more than 2 from the section starting with a 4, which includes basically Northwest Winnipeg. So that would be areas including the North End, West Kildonan, Garden City, Tyndall Park, and all of the new developments in the very far reaches close to the perimeter highway. Have you guys in the field been noticing or sensing any kind of anything in general that might be pushing people to the east side of the city or the far west, but taking them out of the northwest and maybe out of the areas starting with a 1?
Um, I'll go first here, Patrick. I think that the demographic is of people in 4H, which is the Maples, or 4G even, and I know that 4G had a high absorption rate. I think that the sellers are a little bit more difficult to negotiate with and find deals. even if their house isn't um exactly worth what they're asking. Like if you look at some of the homes that are active right now, both in the Maples and in Garden City, um, there's stuff that's been sitting since the spring, and there's been no price adjustments. There's been no changes to the listing description to make it a fresh new listing. They're just sitting there, and it's like take it or leave it. So what this does, because although people would love to move to these areas, if the sellers are not willing to move on their price, the next best thing is to rotate to the next closest thing, which would probably be east for anyone living in Garden City. Take that trip over Chief Peguis, right? And then all of a sudden they're in an area where there's tons of bungalows that are maybe not as big, right? Because Garden City, I know for a fact, has a ton of stuff that's like over 1,000 square feet. You might have to have a house that's 900 square feet, but it's a 50s bungalow with a garage close to schools in a good area. So, they just take their pre-approval money and they just move into the next area. And I think that's why some of those places over in the west part of town, uh, specifically Garden City and Maples, I'm referring to, because I do think that in West Kildonan, there is a mixed bag between people who like Scotia Heights and things like that. But I think that's probably why. And not to mention too, if we're talking about the twos, which is say Vital, um, again, like it's just cheaper, and you might not get as much house, but it's more affordable for the first time home buyer. Like just recently we bought a house over on Wales, and it's 1,000 square foot bungalow with a garage for 260. Now that house is, there's some problems with the house that we'll have to correct and things like that. But my point is you could go and buy a house that needs work for under 400 or under 350 in these areas, or you could try to go into a bidding war in Tyndall Park or in Maples, or maybe not even a bidding war, just try to buy these houses, and the sellers will not move off the price.
Right. And that's,
Yeah.
you know, a pretty logical way to think about it, that the funds are just being shifted where there's more available opportunity. And for those of you that may not have listened to this podcast or read these market updates last year, some of the most consistent hot areas in 2023 were often the far reaches of the Maples, Garden City, Tyndall Park, etc. And this transitional period is likely somewhat reflected in the fact that it was so explosive and so hard to buy last year.
Mhm.
Anything to add to that, Patrick? Any further thoughts to elaborate on what Denzel said, or any theories of your own?
Yeah, something I noticed with those deals that come around, like yeah, Garden City, Maples, Tyndall, is whenever I get into like walk into these homes and start talking with the owners, it's not like they need to sell. Like maybe it's just again the people I've been meeting, but a lot of the stories like, oh yeah, we have a paid off mortgage, we've lived here our whole lives, raised our kids. I met one guy that he even imported like hardwood flooring from Austria. They spent a ton of money on their homes, great renovations, and now they're just like, cool, we could retire, cash out, but if we don't sell it at the price that we want, like all good, we'll rent it for a price that would be way above what they thought they could get. And I think they're still feeling that like explosive price you mentioned from 2023. And they're in this point where they feel like balls in their court. Like they don't need to sell, which makes sense. Like, again, a lot of these people I've chatted with, they're already retired, no mortgages, and they could just sit on the house, rent it out, or they're looking for I can remember at least six of these owners. They're looking for like a cash buyer. They're like, oh, if someone has to get financing, like we might not even entertain it. So it's like a very specific type of seller. But then when I talk to people that are like children of these type of families, well, they can't buy near their parents' place. Like they can't necessarily afford to stay within Tyndall, Maples, or like the Garden City. And then yeah, they've just been looking all over the place. And a lot of people don't like the West End, like younger people. I don't know why. It's a great area. And then they tend to look at like Transcona and then even like Glen Elm. And then back when I was still teaching public school education, I noticed that there was a big jump with like younger families moving into the Transcona area too.
I definitely have noticed that as well, like a big trend of people moving to the far reaches of Transcona, which for just in case you're not a native Winnipegger listening to this show, Transcona was regarded as basically a small town that was kind of a part of Winnipeg, but only technically for many, many years. And
Mm.
now it's very much a part of the city. It is a little far to get there if you live in the West or whatever, but it's yeah, it's really become something beyond what it was 20, 30, 40 years ago. um Really great stuff there, guys. I want to take this opportunity to ask you both if you have any closing thoughts about the market data specifically, and then from that point on we're going to move on and interview Patrick about his investment journey. No.
Nope, nope, not for
Okay.
me. I
Fair
think
enough.
I think we covered I
Yeah.
think we covered most of it.
Yeah,
Um,
that's solid.
yeah, not too much to add to that.
Awesome. Well, stay tuned next month for obviously more details on how things transpire. Don't be afraid of the 0.47% drop, and things are still chugging along. There's still lots of deals to be had and lots of really good opportunities to list and get a great outcome, but also a lot of good opportunities to buy. The market's feeling healthy and reasonably balanced. Okay, Patrick, obviously you've had a lot to add to this episode already, and I think people have been able to piece together a little bit about you and your situation just from the comments that you've made and the questions you've answered in so far. But I would like to start by just giving you the opportunity to speak freely about who you are and how you got started in real estate.
Yeah, and again, thanks for having me on the show. Yeah, my name is Patrick J. Hilario. I was a teacher for a very long time. Was teaching since, well, I was a tutor first, then became a teacher. Taught for about 6 years, and then during that time, like I always wanted to get into real estate. I must have read Rich Dad Poor Dad when I was 16 or 17, but I didn't grow up in like a wealthy family. Like we were, started lower, ended up becoming middle class. And like we never really talked investments. Like I specifically remember I must have been like 7 years old. I would always see those for sale signs for houses, and I asked my parents, like, "Oh, what is that?" And then they told me, "Oh, that's only for rich people." So I always had like this kind of limiting belief around real estate. Anyway, after reading Rich Dad Poor Dad, I was like cash flow, passive income, that sounds cool, but I'm like 17, like I don't know much about real estate. I'm gonna try all the other things first. So I, learned all about financial literacy, started doing like some sales, learned how to invest in the stock market, dividends, learned how to lend money, even learn how to like get recurring income in different ways. I worked in the financial industry for a little bit, and it wasn't until I already had like 10 sources of income that I said, okay, maybe like real estate makes sense now. Like we should actually try this. And luckily, I had just typed on Facebook, hey, I want to meet with a real estate investor in the city that actually does real estate. I'll pay for lunch or dinner. I just want to pick your brain. And I get this message from this guy, and he's speaking to me in French. And I'm like, oh, what the heck? Like, how does this guy know I speak French? And then all of a sudden, like, I get introduced to my mentor, Nelson Camp, and he had been in real estate for well over 15 years. He also studied at the same university I went to, taught in French, became a counselor, and basically he kind of took me under his wing and he said, "Hey, once you become a teacher, like they're going to love your income. Like you'll have solid income, banks will love it." And he's the one that gave me my first strategy and how I got started in real estate, which was a house hack. So for the ones that don't know, house hack is when you use your 5% down, you live in one room, and then you rent out the other rooms. So luckily, I was already learning about private deals. And I come home from dance practice one day and I noticed that my neighbor's house, there's like paramedics outside. And after a few of these real estate trainings, they kind of train you to be a little bit nosy, to like start asking questions to just random people, get to know, build those connections. So I walk up to the paramedics. I'm like, oh, like, is everyone okay? And then they let me know that my neighbor had passed away. Uh, Literally the next day, there's a lady outside and she's like measuring the windows. She's like comparing paint to whatever the color of the paint of the wall was and trying to pick colors. And I noticed that from previous real estate trainings, and I just started talking to her. And she was actually an investor from Vancouver. Their company had developed Lindenwoods way back in the day, and they just moved to Vancouver to do bigger deals there. And she was just like, "Yeah, I was just in the city. The deal popped up, last night, and then we had some extra cash. And yeah, I just like to spend my play money in Winnipeg." And I was like, "What do you mean play money?" And she's like, "Oh, like this house in Vancouver would be like 1.5 to 2 mil. Here we can buy it for like, 10 cents on the dollar." Eventually I just kept building a relationship with her over the summer. And then she knocks on my door. She's like, "Hey, I'm gonna leave. Do you want me to connect you with the seller?" I was like, "Cool, yeah, I'd love to do that." Connecting with the seller. We did the private deal because they were open to doing that as well. And they actually allowed me the lockbox code so I can start finding tenants before taking possession. And I closed that deal in end of 2018. And before I even was given the keys to actually take possession of the house, I already had tenants lined up. So then on day one, I already had tenants for the house hack. But that used up my whole life savings. Like I sold all my stock, pulled up money from my RRSP, and I was like, "Okay, well, now what?" So that's when I just reached out to my mentor and I was like, "Hey, like, thanks for the help. I got my first deal. Like, now how do I do this? Like, I don't want to waste another like 5 or 6 years saving up all my money to do one deal. Plus, the first one was only 5% down. I knew at the time every rental on top of that would be 25% down. Now, later on, post COVID, they actually changed it to 20% down. So that made things a little bit easier. So then that's where I actually took the real estate a little bit more seriously, started learning about it. I know Denzel mentioned a story where he would like listen to podcasts in the shower like every morning just to like learn real estate. I remember doing something very similar. I would just listen to podcasts and audiobooks and just like be obsessed with real estate. And just kept learning, kept closing deals, and then COVID hits, and it was like that was kind of the make or break moment because I at the time I had a few vacancies. We were trying to rent the places out. You didn't really know what was going on, like with the mass or what was like if you could bring people into your rentals. I had a bunch of renovations because we were still doing burrs that were delayed, and I remember specifically renting out this one house. I had a boarded up window and I just said, "Hey, like we'll discount rents. That window's coming. It's like right in the middle of the kitchen. But with this whole thing that's going on in 2020, like just bear with me. Once that window's in, this kitchen's gonna look great." Luckily, they moved forward. And then Denzel and myself were talking, and he's like, "Why don't you just do the 10 deals in one year?" Because my goal at first was just one deal a year for 10 years. It would be good. I'd be able to retire with my parents, live a good life, continue teaching. I'd be happy. And then Denzel kind of really pushed me and he's like, "It's the same amount of deals. It's still 10 deals. It's the same amount of time. Like, let's say you take 2 months per reno, it's still going to take that amount of time. Still the same amount of money because it's still 10 deals. You might actually save money because if you delay it, then you're also fighting inflation. Versus if you do it now, well, you'll get the prices for renovations now." I was like, "Okay, I guess that makes sense." And then we just went a little bit crazy. At one point, I was doing 4 burrs at the same time and then realized, okay, well, this is quite a bit. I don't necessarily want to do 4 renovations at the same time. But that pushed me to build better systems, continue to just learn more about real estate because like your learning will continue for your whole career. And eventually people started asking me about like, "Hey, how are you doing this many deals? Like, what's the secret? Can you show me?" And eventually that's how we started with the coaching. Like at first I did it for free. My first student, he just offered me tattoos for life. I was like, "Cool, I'll take that deal all day." Like I wasn't even sure if I could teach him properly. And then within 28 days, he closed his first deal using basically none of his own money. And then, yeah, more people kind of found out. And then I just kept documenting the process. And eventually, yeah, now we have over 106 active students in Alliance Real Estate. And then it's continually growing. And then, yeah, it's cool to see that like the strategies that work for me won't necessarily work with other students. And that's really what I try to highlight with people where you need to do real estate built around your life so that your life doesn't just become all work in real estate, because you don't want to do deals just to do deals. You don't want to be a real estate investor just to do real estate. Like, it is a vehicle. Like, it's meant to be used to build the life that you want. And maybe that goal will change, right? Like, I remember a time I would be in a point where I would never wholesale, I would never flip. I just didn't want to do that stuff. I just wanted to own rentals, call it a day. But as you continue education, as you see the market change, well, it's like, hey, well, why not wholesale if the deals come? Why not do flipping if the deals come? And that's forced me to not just learn what strategies work for me, but continually learn and also try different strategies just for the purpose of education. Like, I have one new build that we're trying to do, and it's been a headache. Like, I won't lie, it's been a money pit, but I've learned a lot, and I just look at it as like tuition, right? Like, you're going to pay the price in real estate and investing anyway. You're either going to pay the price with money because you'll lose money, or you'll just drain your bank accounts or whatnot. You'll pay with time because then it's just going to take a while for you to go through that learning curve, or you'll pay with like stress, right? So for me now, I just look at it as like, I'd rather pay with a little bit of money, just hire someone to teach me these things, than pay the price of like time and stress.
Yeah.
You know what?
Um,
That was a lot to respond to, and I've got so many questions and comments.
yeah, me
Denzel, it
too.
sounds like there's something on the tip of your tongue. You go ahead. Patrick,
Um,
I hope you remember everything you said, because like I took some notes here, and like, yeah, we're gonna really work off of this. But Denzel, you go.
yeah, I just wanted to comment on the story about pushing Patrick to do that many deals at once, because I think that, first of all, for anyone thinking about going big in real estate and doing lots of deals and just having real estate as a full-time career and hoping that it's going to make you rich, let's not forget that all of this needs to be done very responsibly. When me and Patrick first started, I was 23 years old. I'm 27, turning 28 now, so it's about, 4.5, 4 years since I've started and got into the business. And it's really easy during that time. It was very easy during that time for your mistakes to be hidden because of the hot market. And I do believe that that time will come again. Not sure when. And when that time does come, you'll see and hear about a ton of newer investors jumping into the Winnipeg market, buying things left and right. And, I've had some conversations with Patrick that when that time comes, that's probably when you- I'll sell everything, and give the opportunity to those other investors to jump in. And so I don't know, I just found it really refreshing, Patrick, to kind of hear all of that once again, because it's been a long time since I've reflected and even thought about any of that. And even just your perspective with regards to the rental real estate, because I just have zero interest at this point in my career in any rentals whatsoever because of some of the decisions that were made in terms of just strategy wise with the portfolio. And so that's why I say, like, for anyone listening with aspirations to have a large portfolio or whatever one would consider large. I myself have about 18 rentals. Just proceed with caution. Patrick is 100% right. There are going to be mistakes that are made, some bigger than others, but it's all relative. Like, you lose 5 grand on a deal, and that's like shattering to someone where, someone like myself, we could lose 40 grand on a flip. And yeah, that's substantial in comparison to someone who lost 5K, right? So that's kind of what I just wanted to I have other questions, but I'll let Keenan jump in here. I just wanted to share that before I forgot.
Oh, no, no worries at all. That's a good point to
Yeah.
bring up. Like, real estate is a long game to play. And if you're
Yeah.
able and you have the bandwidth and the responsibility and the money and the time to do 10, 15, 20 deals in a year, good for you. Like, excellent. Go for it. I in fact say, please do. It's probably in your best interest. However, you don't have to go that fast. It's not for everyone. And I'm sure Patrick knows that already. But Patrick, thank you so much for sharing your story in such elaborate detail. Um, there's a lot to break down there, like from the starting off house hacking, working as a school teacher, transitioning to a burr investor, to doing 10 deals in a year, to becoming a coach and dealing with students. I wanted to take a second and just slow this story down to the point that you are a school teacher, you have some amount of rental property in your portfolio, you have ongoing projects. um, what was the moment that you decided, you know what, I'm done teaching in a school setting, I want to do real estate all the time? And please explain the logic and your thought process going into that obviously very life altering decision.
Yeah, that's a good question. And the I guess the insight kind of came where like I never hated my 9 to 5, right? Like I still love teaching. I'm totally okay to do that for the rest of my life. And it kind of came down to I was getting close to like 30. I think it must have been 2028 or 2027.
So for the
Um,
listeners out there, could you just let us know how old you are right now?
yeah, now I'm 30. I just turned 30 in
Oh, okay.
March.
I gotcha.
Yeah.
Gotcha. Okay.
And I kind of looked at it where I was like, hey, well, I could stay comfortable, keep doing this, cool. Or I could take the risk now when I don't have kids, I'm unmarried. My parents are getting older, but they're not to the point where it's like so old I have to like take care of them all the time. And I said, okay, well, it's going to be less of a risk if I make the jump now instead of delaying it till later. So I kind of sat down with a couple mentors and I was like, hey, like, is this a good idea? And then my one mentor, Nelson again, he just like sat me down. He's like, hey, like Pat, like, why don't you have bigger goals? Like the worst case scenario is you screw it up, you sell some rentals, and you go back to teaching because you love it anyway. I was like, yeah, that makes sense. And he's like, think about how much time you get back. Now you can start building, the project that you want. And he knew I always wanted to build like our own type of school and teach in a different way that, you know, isn't really taught in public school education. Like, yeah, I was teaching financial literacy Fridays every Friday to my students, but that's not really part of like the curriculum. That was just something extra that I could do. And the big tipping point was really when the lockdowns came, and it was pretty difficult for not just myself as an educator, but for a lot of other teachers. And I just saw like a lot of my colleagues that started teaching with me were just like getting stressed. They started to lose like the joy in teaching. And I was like, hey, I don't want that. Like, I'm privileged enough that, in the past, I made some decisions where, we did buy rentals, built a little bit of financial independence there. I was like, hey, cool. Talk to my boss, talk to my principal there. And I was like, hey, I want to take a 1 or 2 year sabbatical. Like I have an opportunity to teach real estate, teach financial education. I'm still educating. And hey, if I decide to come back, cool. If not, then hey, at least I'm still educating. And I'm like, very grateful for the opportunity you guys gave me. And then they gave me the blessing. And then, yeah, and I just kept running the education company that way. And then that showed me and gave me the free time to start seeking out other ways of like teaching. And I traveled for about 1.5 years, almost 2 years, where almost every month I would just go to a different, whether it was like a seminar or just like a meetup or a networking event, and just find these like people that were just really good at teaching, but they focused on, of course, wealth. So it'd be like investing in business, health as well, and then relationships, communication, and then passions. And then that gave me like a view that I try to share in our education kind of teaching methods and alliance now, where it's not just about the money, right? It's like what the money can really bring you, right? It's like it can buy you free time to spend with family. It can buy you free time to actually just not stress about showing up to your job every day and instead just figure out, okay, what do you actually want in your life? It can give you the free time to actually just like work out properly and just pay attention to your health. That's probably going to make you more money in the long run. And it's also going to help you figure out, okay, like what is it exactly that you want to be passionate about, right? Like I forgot who told me this, but it was another mentor of mine, and they had mentioned that they don't really love real estate. And like I thought about it, I was like, yeah, I don't really love real estate either. Like I love teaching, real estate just allows me to have the freedom to teach and do what I want when I want. So it was more so really like chasing kind of that freedom and to at least taste it before all the other responsibilities of life kind of kick in. Because I always knew that, I wanted family, wanted to build something a little bit bigger and that kind of transcends myself. Um, and I knew that if I delayed that for too long, it would be a lot more difficult versus, hey, lucky enough to have some real estate and buy that, like a little bit of that runway at least to kind of chase those dreams before things get a little bit more, I wouldn't say difficult, but Denzel's like a new dad, right? And I'm sure Denzel, you've seen that the amount of time that you could put towards different things is different now, right? You use less time. Like I don't know if you're working out as much. I know even when I went full time in real estate, like I don't work out as much. I'm not spending, an hour and a half at the gym like when I was younger, probably doing like 23 minutes to like 45 minutes max. So it changed
Me and
like
Keenan
your
just did.
yeah, it changes what your priorities are, and I knew my priorities would change. So the main thing for me to make that jump was like, oh, I can take the risk now, and then just set myself up for when those priorities do change.
That's a good perspective to have on that, and thank you for elaborating on kind of the thought process that went into the situation. I'm sure a lot of people out there who might already be investing in real estate have wondered or worked out mathematically what it would necessarily take for them to focus solely on investing versus doing whatever it is they're doing alongside investing. So, kind of a bit of a follow up question to sort of the situation that you were in at the time that you were making that decision. Um, Kind of in your response to the first question that I'd asked you, you mentioned that you'd been doing a lot of BRRRR deals and were focusing on accumulating rentals, but not really flipping or doing wholesales or assigning contracts away. Was that sort of the idea going forward, that you would just consider to build a very, very large investment portfolio using the BRRRR method and then try to make your focus the education while paying down any mortgages that might be on those bird properties for the long term? Or was there a kind of a more complex or grandiose plan than that?
I think you hit it right on the head there. Like at first, the goal really was just do the burrs and then give myself the free time, do the education, and then just allow these rentals to get paid down over time. And then I know you mentioned earlier you had the question of, well, how did you react to higher interest rates? And that's really pushed me towards doing more of the flips, the wholesales, and even just starting other like active incomes. Like I started doing a little bit of the small business acquisition, and that was mostly to increase the active income. Because once those interest rates got higher, then I kind of felt the pressure, right? It's like, okay, well, we're cash flowing a lot less now, like we're feeling the pinch. Now what? Right. Then I kind of just tapped into, okay, well, good wholesale, could do a little bit more flips, could acquire these other businesses to get some active income at least. And then that's where that transition came. Because I remember there was there's a time where I needed 11 grand in like 21 days. And I was hanging out with Denzel and and I told him the situation. I was like, hey, well, I had these renovations, had to make these extra expenses, and I'm going to be behind like 11,000 bucks on like my mortgages. Like, have you ever dealt with anything like this? And then Denzel's just like, oh, why don't you wholesale a deal? I was like, oh, that's right. I guess I could do that. And
Go
found a
figure.
deal. Yeah, go figure exactly. So I was like, hey, let's just push for that. And then yeah, within I think it was like 11 days, found a deal, closed it, kept my 11 grand and it all worked out. And then that's what really showed me it's like, okay, there's skills that you'll learn doing the burr or doing like even like buy and holds as long as you're again constantly educating yourself and not getting stuck in like tunnel vision of like I'm only doing this, only doing burrs, I'm only doing buy and holds, because then it opens up these doors just in case you need to do that, right? And that's what really pushed me to like try the other strategies. Is it like passive income's great, I always call it passive, it's as passive as you make it, because then you do need proper systems or a good like property management team to like really sustain the rental game. It's not like completely passive. That's why I always tell like students or people I run into, it's like real estate is as passive as you make it. Like I don't want to sell people a pipe dream that's going to be amazing and easy because it's not, and
It's
then show
definitely
them,
not.
yeah, no, it's not. Like I know people that have already quit after like 5 years. And I like that you mentioned earlier that it is a long-term game. Like even if you're doing wholesaling, even if you're doing flipping and it's more of the like a shorter term strategy, in the macro, like to build wealth is going to be a long-term game. Like you can't avoid that. So then why not learn those other strategies just in case something happens and now you're in a pinch and you have to be able to increase active income. And I've had many conversations with Denzel about this, how the active income side is just as important, if not more important than the quote unquote passive income side. Because both you need both to really fuel and add into the wealth building kind of strategy. Like having passive income is great, but if you don't have the active income, well, you're kind of stuck too. And having active income is great, but if you don't get some sort of investment that's creating that passive income, well, you're kind of stuck. You can get those golden handcuffs where like you're stuck at a job or business that you don't have necessarily an exit strategy in the future.
Fair enough. Denzel, I know that you wanted to ask Patrick a lot about interest rates and weathering storms as it pertains to being a landlord and some of the challenges that can come with it. I'm going to let you take it away kind of in that regard because you are the landlord and the one that actually owns a lot of property. And as many of you remember, I do not own rentals. So that is your field and I will let you go right ahead.
Keenan needs to buy some more rental properties, guys. He needs to no, I'm just joking. You won't see Keenan buying a rental in the near future, that's for sure. Um,
Yep.
yeah, so Patrick, I gotta ask, because you and I are kind of in the same seat sometimes when it comes to the just going through the high interest rate environment. I think you're the first guest, or actually the second guest who actually owns rentals. I know that when we had Guy on the show, Keenan, we didn't really dig too deep into like what it's like to be a landlord. We kind of just talked more so about him and his time as an agent. So I'd be curious to hear, and I'll probably comment after, but since the rates increased, what are some of the changes that you've made in your business so that you can still cash flow, still um make the business profitable as a landlord, and yeah, like how has that changed things with the new rate environment?
Yeah, that's a good question. Um, First thing that I noticed when interest rates got higher was just more of these landlords kind of complaining because we're in a couple groups with other landlords, and after having those conversations and then just asking them like what else could we do, I think that's a really powerful question, not just in real estate, just in general in life. Like what else can you do? First one that came up was, okay, you could increase rents, right? I had some vacancies come up and I just tested the waters. I always like undercut my rents of the market. So then, like I think I mentioned earlier in this podcast, where I increased rents across the board to like $300. So all my $1,300 rent became 16, all my 16 became 19. And I even thought that my 1,900 rents were already high. Then I was able to push to like 2,200. And I was like, oh, that's crazy. And that helped. So, like, just increasing the rents, which I hadn't done for at least 2 years. Then the next thing that helped was just, like I mentioned, increasing that active income, right? Where I just took a list of all the skills I already had. Like, what were things I was already good at that I could monetize? Well, one was like my ability to actually teach. And then, okay, cool. We could do that for the real estate coaching side. Awesome. We'll get me a few more clients. But then I also noticed like a different, I guess, niche where I would have conversation with these investors, and a lot of them were like, doing better than I was. Like I had one guy, he was already doing like 8 figures in like flips and then new builds out in Austin, Texas. And then I had another few people where they had already like 20 rentals, or like one guy I talked to was already investing like $2,000 a month, already built a solid net worth, and he didn't really want to touch real estate. Then I asked him like, well, why are you on this call with me? Like, how do you like, how can I help? And then they're like, honestly, like, we heard you hired a dating coach when you're younger. Um, like, I just want a girlfriend. Like, I want to how to start a family. And it just kept happening. These people kept mentioning that. So then I kind of took what I teach with real estate and then transferred it to kind of the things that, my previous dating coach that I had when I was like 17, 18. And then we kind of built that as like a side business. So like that brought in some income. Um, Totally random. Like I never thought I'd be doing that. But yeah, I guess it's a need where a lot of these, it's mostly guys I find where the more I like poke at why they want to get into real estate or why they want to get rich, it's so that they could have a family and like get a girlfriend, let's say. And I was like, okay, well, why don't we just focus on that? Like I help people build a roadmap for their real estate. Okay, well, in order to build a roadmap, we need criteria of what you actually want out of life. So then I just took that and be like, hey, well, what do you want out of a romantic partner? Then you need to market. Well, if you don't have leads for deals, it's kind of hard to close deals. Well, the next part is like, okay, well, how do you use social media and your networking and like your in-person like skill set to actually get leads of people that would be a good fit for you to find like a wife or a girlfriend. And I just literally took the exact same things I was learned like teaching in the real estate side and then built a new offer on like the dating coaching side. Now it's super random, and even like our COO Vishal was always like surprised. He's like, how do these guys like pay you the same amount for real estate coaching for like the dating coaching side? And I was like, honestly, I think it's a bigger pain point. Like I know a lot of people say they want to make money, but in reality, like it's kind of a small percentage of people that will actually sit down and focus and try to build wealth versus I think more people, especially guys
Want to
out
get
there,
girls?
want to get girls. Yeah. It's like that's why they try to get money. So that was one thing that helped a lot. Like it's again, it's a very small part of our
Wow,
business, but it did increase the income a little bit.
We could
that's
probably do
awesome,
a
man.
whole episode on just that side of
Mhm.
your active income involvement.
Yeah.
I'm just sitting here listening, going, "What
Yeah.
the heck? I had no idea you were doing that." But
Yeah. Yeah, we don't
Yeah.
honestly,
advertise it that much, but it's yeah, it was kind of funny. Like I just noticed like it happened, yeah, a little bit last year and then yeah, bleeds into this year.
Well,
honestly,
good for you with the creativity there. I think that's awesome, Patrick. That's really cool.
it
Sorry, Keenan.
is, and it's a little sad to me that it has to come to that. By the way, when you told that little anecdote about the guy that's investing $2,000 a month, he's got a solid net worth, and like, okay, so why are you on the call with me then, buddy? Like, what's the deal? Is this some kind of prank? It's like, no, I need a girlfriend. Like,
Yeah.
Yeah.
oh, like that's a little
That guy,
sad, don't you think?
yeah. That guy's
Yeah.
like crushed it though. Like first I gave him homework of like, hey, like talk to five strangers that are like girls that you'd be like, oh, I'm kind of intimidated by that girl. And then come back to me. Like you might not even need my help. Comes back after like 5 days and he's like, yeah, that was really difficult. And then we put him through the program. Within 2 months, he like was going on, I think 7 to 10 dates a week.
Just slaying that guy. Good for
Holy.
him.
And then after he was just like, he felt bad after because he was seeing multiple people. And I was like, hey, like as long as you're not lying to them and like this is all like you're being transparent, like it's okay. And then eventually like got a girlfriend within like 90 days. And then now they're
Cool.
traveling like Japan together, doing all these things. And I'm like, cool, man. Like now he's going into the gym. I try to not like get these guys to like focus on other things, like the gym or like we call it looks maxing in the industry, until after. Because then they make an excuse like, oh, I'll do the dating once I hit my PRs in the gym, or I'll do the dating once I like get my driver's license or whatever. Um, but then yeah, we just focus on that. And yeah, he got his girlfriend in under 90 days. And yeah, he's pretty
That's
solid. And
awesome.
he's like, and I like that it's more than just that. Like it's more than just the girl. It's more than just the money. Just seeing his confidence grow. And now he's like, he's leading team meetings at his job. He got like a couple promotions. People are like, what happened to you? Like you're a lot more confident. Even in his voice is a big thing. Like that's how I notice with a lot of these clients is like when they jump on a call with me in the beginning, like their lighting's all weird on their Zoom. They have like weird neck beards sometimes, or like an off haircut. And then when they speak, it like has that upward tonality where it's like, hey, like how's it going? And then after, his like voice seems a lot more confident. He's not trying to like seek rapport. Like he's just like, hey, this is who I am. If you like it, cool. If you don't, like that's fine. I mean, they have a lot more of a, I wouldn't say dominating kind of voice, but I like to call it like positive dominance, where they have that breaking rapport, but they do it with a smile, and like it's cool transformation. I think I get a little bit more of a kick out of that than I do of the real estate, but the real estate's still cool because then yeah, when students close deals, it's like awesome. Like you're moving towards becoming a millionaire. Versus this is a little bit different.
Honestly,
Yeah.
we're probably going to need to get you back on to explain a little bit more about all of these
Yeah.
details. Um,
Yeah.
that last bit
I
is a good segue into another question that I had. I don't want to like monopolize the conversation, but just in as few as words as possible, so we can let Denzel ask you a bunch of stuff too. I did want to ask, dating section aside, when the students that approach you for help in real estate approach you and make an arrangement with you for whatever service you're happen to be requesting on their behalf, what exactly is their goal most often? And I'm sure it varies, but are they coming to you saying like, Patrick, I want to be a millionaire? Are they saying I want to do one deal, or something in between?
Usually something in between. I'd find that I'd say maybe only 10 to 20% of my clients want to go full time into real estate and like actually like hate their jobs and want to get out. The rest of them, like the other 80 to 90%, they just want enough rentals to hit like a specific goal. Usually it's retire out their parents or be able to fund their kids or their future kids like college and tuition funds. That or just not have to deal with like the stress of finances. So I find that's really where most of my students come. Like they're not really trying to become billionaires or anything like that. Usually they're like their financial, let's say, independence numbers for the most part are around the 1.2 to maybe up to like 2.4 mil as a total net worth.
Gotcha. Okay. So it's a pretty diversified sort of set of circumstances then. But
Yeah.
Denzel, I did cut you off, so do your thing.
No,
Jump in there.
that's okay. I did want to comment just on the Patrick talking about his dating offer and things like that. The education space has a lot of upside to it. From I guess there's a lot of other real estate. Well, I shouldn't say now. Like as of today, I'm not very. I think Alliance is probably the most advertised education for real estate investing company here in Winnipeg. It used to be the notorious Black Card University that was probably the most sought after, I guess, even not just in Winnipeg, but just throughout Canada. And I think there is some value in it, but in order to really do well at real estate, it takes a certain person. It um, from a personality standpoint and the goals and their ambition, the work ethic. Like real estate is a tough business, and I think a lot of people glorify some of the wins a little bit more than others. And yeah, so I won't get too much into that. Just more of a comment. But anyway, Patrick, just going back to the land, being a landlord and stuff. What do you do to weather the storm when faced with vacancies and the tenant just trashes your unit?
Oh, that's a good one. I actually dealt with that last month. I guess we're continuing dealing with it.
Oh, sorry to
Um,
hear.
yeah. So luckily we got them out. So with vacancies, I find that being on top of it helps a lot because there was a time where I did get comfortable and I was like, oh yeah, like we got a larger portfolio. If I have a vacancy or two, like we could just weather the storm. We have enough cash flow. It's okay. Um, that was a mistake. Like that was something that I really try to highlight with students. Like, do not get comfortable, even if you hit your goals. Like you do not want to be comfortable in real estate. Like you always want to look at it as it is a long term. Cool, you might be doing great the first 5 or even 10 years, but then you don't know what can happen later on. So what I did was make sure that hey, the moment we have a vacancy, we're trying to get tenants in there right away, fix what needs to get done, and then just really have a sense of urgency. Same sense of urgency that I had when I was like new. Because like when you only have, let's say, two rentals, well, if you have one vacancy, like half your portfolio is vacant, right? So yeah, we really tried to the moment a tenant's out, okay, we're getting cleaners in there, we're getting handymen in there, repaired everything, and then we're immediately advertising. So I've had a few vacancies where we fill them within less than a week, right? Because there is a demand for the rentals. And then the other part of your question was, I guess, dealing with was it the cash flow issues with vacancies, or sorry, remind me again, Denzel?
Just more so just dealing with vacancies in general, because I know that I right now don't have any vacancies, but the biggest challenge especially if you have a larger portfolio, and I'm talking about, 10 plus homes or units, and you're self-managing and stuff, it's the re-renovation of the home to get it back to its rentable condition, I think is the most tiresome and annoying, because really, sure, it's important that we try to maintain the assets value, but through time, a tenant's going to beat that thing up, especially if they're not exactly the best tenant. But I've made mistakes where I fill a vacancy too quickly, and maybe I'm not as careful with the tenant selection, and all of a sudden I'm like evicting them 1 month after their tenancy,
Right.
and
Yeah.
it's
Okay.
just, and in that 1 month they can completely destroy the house, right?
Hmm.
So um yeah, I don't know, I think that's probably the biggest thing for me that's turned me off from rental properties. I think that if you want to be a landlord, you better have a large cash reserve, because when, sorry, I'm swearing, but when shit hits the fan, like it comes down quick, especially, let's call it, even if you have this problem across 5 doors, like that easily could be 50K in repairs, and then, not to mention the missed rent income. So now you're looking at like a 60 grand bill, and then you have to go back and re-rent those homes after. So yeah, just it's costly being a landlord. That's why now I kind of look at it as like, okay, I'm a young guy. If I could flip a house and make 30 grand or 50 grand, or wholesale a home, make 10 grand or so, I'd much rather do that. Excuse me. I'd much rather do that and make my cash now than wait, a 5 year mortgage term to get liquid and maybe make my 100 or whatever, right? Because I still have to wait 5 years for that. So that's just my take on it. I think you answered it pretty well. Um, I do have one last question for you, Patrick, because I think we're running out of time here a little bit. Are you looking to expand your portfolio in the next year? If yes, like what are you looking at buying? And if not, what's next for you, over the next 12 months?
Yeah, that's a good question. So I'm looking to slowly get into like the larger commercial space. We've worked and connected with a lot of, I guess, agencies in the city, and there is a big need. Like I know there's one agency I'm working with, like they need to house like 487 families. And one of the mentors I'm working with now that he actually helps me with like the mergers and acquisition side. He's like, it's the same amount of effort if you just try to play bigger. Like you might have less deal flow because you're hunting for, he calls it dragon hunting versus hunting for deers, where like I look at hunting for deer as like just single family homes. So that's kind of what I'm shooting for right now of like, okay, we can close a larger commercial property, whether that's like an apartment or whatnot. I don't need to take like full ownership of that, where I could actually work with a few investors, kind of pool our money together and close a deal that way, or do something similar, but on the acquisition of a business to kind of increase the active income. So yeah, kind of I'm okay with my current like residential rental portfolio right now, and I just like slowly pay that down. But now kind of hunting for those bigger deals. Because then hey, if I just close one of those deals in the next, even if it takes like 10 years to find something that's awesome, well, hey, that already sets myself up. And I find that it's a combination of always being a little bit outside my comfort zone. So I continually learn. But then at the same time, enjoy like the freedom we've been able to build right now, where it's like, do I really need to close more deals? I don't need to. It's more so to see like, hey, well, how far can we really take this?
For
Interesting.
sure. I think that's smart. And I've spoken to Keenan about this too. And I think for me, um, like yourself, I'm looking at actually getting as liquid as possible right now. Selling a lot of rental properties in the next 12 to 18 months is the goal, if not all of the rentals. And then in order for me to get back in the game and be a landlord again, I'd only want to own things in either cash or some kind of multifamily building in the commercial space with a really low loan to value because I put all of my money in it. Just because after going through the traumatic experience with the high interest rates and corrections and just chaos, I just have completely lost interest in owning rentals just as like a ton of single families. I'd rather have all my stuff under one door and or one roof, I should say. And I just find that it's a little bit more manageable if there is a vacancy. You still got another three, four, five, six people that are paying. So that's what I think. I don't know. Cool. Well, I'm happy to hear that you're going on to do bigger and better things. And yeah, man. Keenan, is there anything else that you wanted to ask Pat?
The last question that I have for you, Patrick, is one that I've asked pretty much every host, or sorry, every guest so far on this podcast. But was there anything that you wanted to ask either Denzel or myself to wrap this up? And when you're finished the question, like we will give you an opportunity to explain to all the listeners where they can find you, where they can follow you, and where they can contact you.
Cool. No, that's a good one. I guess a big one that I'd like to ask you guys, because then I always run into these things, whether it's with clients or even stuff that I do with myself, is what practices or like routines or I guess resources do you guys have to work on mindset? Because I know I used to think mindset was so woo-woo, but over the past few years, I kind of realized, oh, like it's actually way more important than I gave credit for, especially in the beginning. So yeah, like what are some things that you guys work on or do to work on your mindset so that, obviously, if you've been paying attention to this podcast, you've kind of realized that, real estate's not all sunshine and rainbows, and we all deal with certain obstacles. But it's like, yeah, how do you guys deal with those obstacles? Or like, what are some practices you guys do to continually like upgrade that mindset?
Denzel, did you want to go first, or did you want me to take this one
Um,
to start?
you could take this one. I'd be interested in hearing what you have to say first, and then I'll go in after.
Okay. So, for those of you who are unaware, before real estate, I was an athlete, but I was also a laborer. I did unskilled, very challenging manufacturing work that required being up early, being dirty, cold, and tired almost all day. And the biggest thing that I would say for mindset in real estate is to never lose that blue collar work ethic. And the way that I go about maintaining that is you need to sometimes stop and recognize whatever situation you're in, that it's probably not as bad as you think. And you can trigger memories from the moments of the pain and the not fun and the low pay by just stopping and kind of thinking about what life was like in that moment. So I'll take myself back to living in my mom's basement. And I'll take myself back to wearing my broken steel toes where the steel portion was rattling around in the right foot and wasn't really stable or safe because I didn't want to buy new ones. Well, not that I didn't want to, I couldn't. Or taking myself back to having slivers in both hands all the time, perpetually, and being tired at 8 p.m. every single day. And, I worked with some Spanish folks at that factory, so they'd play a lot of Spanish music. So if I'm having a tough day of real estate and I got to snap back into it, I'll put some of that on and drive around and just continue and just reset and go, hey, like, this is where you were. Like, just look backwards for a second. And often that sorts it out. But the bigger part of mindset, in my opinion, is you got to find something that will help you stay hard. And For some people, that is go to the gym. For others, that's consistently wake up at 6 a.m. or earlier, whatever that happens to be. Some people like doing the cold plunges. That's definitely not for me, by the way. But everybody has some source of self-inflicted, intentional, and I use this word lightly, but I'm going to say it. They'll have some sort of light self-inflicted pain to discipline themselves into staying hard and not growing soft and comfortable. And all of those little mantras, look backwards, go to the gym, eat properly, train, listen to books, continue to learn, continue to grow, have been the things that I've personally done to maintain sort of my sanity, but also my level of hard in this industry. Denzel?
Yeah.
I
Yeah.
Yeah. I think just like Keenan, uh I played a ton of sports, and I think being an athlete my entire life, um, playing basketball at the university level and things like that, I may have not had the same exact problems as I do today, but it's all relative. And the way that I was able to get through those times was I just always have had a mentality of, I guess, believing in myself. Maybe that because of my imagination and thinking that I can do things as long as I put my mind to it. Can see myself in that, successful kind of space. I think in order for me to continually upgrade my mindset is having people like yourself, Patrick, like Keenan, who are also high performers and want to do good for themselves, around me, constantly having conversations with them. It just um, keeps me in check, keeps me competitive, and I think that's probably what's helped me the most through the years. Constantly connecting with high performing people who just want more, um, not ever settling for less. And I think that Keenan, you mentioned reading books and staying sharp, staying fit, eating the right foods, and trying not to have as many bad habits as you possibly can. I know that sometimes it's hard to not eat the pizza or the fried chicken, you know, for me at least right now. But I just do my best because now that I have a daughter and things like that, I need to make sure that I have a strong um, mentality, just a lot of mental toughness to get through the day, especially being full time as a real estate developer. There's fires that I need to put out all the time, so I have to be on point all the time. Um, but yeah, that's probably what I would say. Staying fit, making sure you're keeping up with your psychology, which is just reading books and gaining new information is always good. And then keeping a tight circle of friends that are also motivated to do better for themselves, I think is a great way to stay sharp and stay hard, like Keenan said.
I agree with
nice.
all of that, by the way.
Totally.
Yeah. The
Yeah.
satisfactory answers,
I-
Patrick.
Oh yeah, that was awesome. And it's cool that the athlete thing like comes up so often where yeah, if you're an athlete as a kid, like you built up that resilience, you learn how to fail in front of public. Like I'm pretty sure as athletes, you didn't win every single game or competition. Like you had to lose
Oh,
in front of people.
of
And
course.
that
Yes.
totally builds that mentality for sure. Especially because it's a team mentality, right? Like even if you're playing like a one-on-one sport, like you still most likely have a team and a coach at some point. So yeah, no, I love that. And yeah, the big one too that I agree with you guys is avoid becoming like soft and comfortable, right? Because I really look at real estate and also like business in general as like self-development with money on the tail end. Yeah, there's strategies you make money like quick and like cool. But as you stay in this longer, it's totally a self-development kind of game because you're always battling that with yourself. And we can't control everything that happens in the market and external consequences. So yeah, I find that yeah, building that resilience and really treating yourself as an athlete, even if maybe we're not competing at like an athletic level with sport now, like we can still take those lessons and apply them to real estate.
Absolutely. And that's I think the fastest way to get good at anything is treat it like a game, treat it like a sport, learn as much as possible, and then like anything else, practice makes perfect. Eventually, it comes together, and I know that worked for me. I know that worked for Denzel and Patrick. It sounds like it, to some extent, probably was a big factor for you too. Um, in that case, I guess, unless anyone has any final thoughts, Patrick, why don't you tell everybody where we can find you and where listeners can reach out to talk to you, whether it's about real estate or maybe they need dating advice. That's I love that, by the way.
Yeah.
But yeah, just say out loud how people can find you. I'll make sure the audio is transcribed and it'll be in the remarks for the episode as well.
Yeah, sweet. And again, thanks so much, guys, for having me on the podcast today. It was a great conversation, and I pulled out a ton of insights too. I was actually like writing notes and just like typing them on the side, so that's awesome.
Awesome.
But yeah, you guys can reach me on Instagram's probably where I'm the most responsive. That's at Patrick J, like the initial Hilario. And then I also drop a ton of content on YouTube. Very similar username. If you just search up Patrick J Hilario, capital Y, capital T, that should show up there. And then yeah, if you want to learn about like real estate and of course even some of like the dating stuff I talk about, um yeah, Instagram, YouTube. And then if you want like the free ebook, I also put together like a free financial and social confidence course, just because a lot of this stuff, like, yeah, I post online, but a lot of that is like freestyle. This course is like very structured in how I actually teach you how to build your social skills, how to build like your finances, because I think they're really tied together. Just message me about that. I can send you details on that, whether you send that to me on Instagram or if you just comment on any of the YouTube videos, I'll fire off that link for you listeners.
That's excellent. So, folks, thank you again for tuning in. We will see you next month.